5 Essential Tips for Ethical Investing. Align your money with your values. Introduction. Are you tired of investing in companies that don't reflect your values? With pressing issues like climate change and social inequality, it's time to align your investments with your principles. Here are 5 essential tips for ethical investing. Why it's important. Sustainable investing has gained momentum, with global assets surpassing $30 trillion in 2020. This shift highlights the growing awareness that investments impact not only financial returns but also societal and environmental outcomes. Aligning your portfolio with your values is now essential. Main insights. 1. Understand ESG criteria. Familiarize yourself with environmental, social, and governance ESG criteria to evaluate companies. Seek firms with strong sustainability practices and ethical governance. 2. Research impact investments. Impact investing generates social and environmental benefits alongside financial returns. Look for companies in renewable energy, sustainable agriculture, and social equity. 3. Diversify with sustainable funds. Consider mutual funds or ETFs focused on socially responsible investing (SRI) that meet specific ESG criteria, allowing for ethical diversification. Practical steps. 1. Set clear values. Identify what matters most to you: climate change, social justice, or corporate governance. To guide your investment decisions. 2. Use screening tools. Utilize online resources like Morningstar and Sustainalytics for ESG ratings to find companies that align with your values. 3. Rebalance regularly. Periodically review your portfolio to ensure it reflects your values and avoid unintentional investments in companies that no longer meet your standards. Common mistakes or cautions. Greenwashing. Be cautious of companies that claim to be green without substantial evidence. Always do your research. Overlooking financial performance. Ensure your investments also have solid financial fundamentals. Balance ethics with smart investment strategies. Ignoring local impact. Local investments can have significant effects. Don't overlook community-focused ventures that align with your values. Conclusion. Ethical investing can be straightforward. By following these tips, you can align your financial goals with your values and contribute to a sustainable future. Ready to start ethical investing? Let your money make a difference. ESG investing explained. Make money with a conscience. Introduction. Are you ready to invest for both profit and purpose? Welcome to ESG investing, where your financial goals align with your values. Let's explore how you can generate returns while positively impacting our planet and society. Why it's important as climate change and social responsibility gain prominence. Investors seek to align their portfolios with their principles. Studies show that companies with strong environmental, social, and governance ESG practices often outperform their peers, reflecting a global shift towards sustainability. Main insights. 1. Understanding ESG criteria. ESG investing focuses on 3 pillars: environmental sustainability, social responsibility, and corporate governance. Evaluating companies based on these criteria can reveal opportunities that contribute to a better world. Research indicates that firms with strong ESG ratings tend to be more resilient during economic downturns. 2. Financial performance and risk mitigation. Companies with robust ESG practices typically face fewer financial risks, thanks to better risk management and preparedness for regulatory changes. This alignment can lead to higher long-term returns compared to traditional investments. 3. Consumer demand and brand loyalty. Today's consumers are informed and conscious of their choices. Companies prioritizing sustainability attract loyal customers, boosting sales and brand equity. Investing in these firms allows you to benefit from market trends favoring ethical practices. Practical steps to get started. 1. Educate yourself on ESG criteria. Familiarize yourself with ESG factors through literature and ESG rating agencies like MSCI and Sustainalytics. 2. Build a diverse portfolio. Consider mutual funds or ETFs focusing on ESG criteria, seeking those with a strong track record of ethical financial performance. 3. Engage in active monitoring. Regularly review the ESG performance of your investments and participate in shareholder meetings to voice your opinions on corporate governance. Common mistakes or cautions. Greenwashing. Be wary of companies making superficial sustainability claims. Always verify their practices. Overlooking financial metrics. Balance ethical considerations with solid financial analysis to avoid missing out on strong investments. Focusing solely on ESG. Ensure a well-rounded investment strategy that includes various asset classes and risk levels. Conclusion. Ready to align your investments with your values? ESG investing offers a unique opportunity for financial freedom while making a positive impact. Start your journey by researching sustainable companies and tailoring your investment strategy to your ethical beliefs. Invest with a conscience. Financial freedom through sustainability. Strategies for the conscious investor. Introduction. Imagine building wealth while contributing to a healthier planet. Achieving financial freedom through sustainability is more attainable than ever. Today, we'll explore how aligning your investments with ethical values can enhance your financial well-being and positively impact the world, why it's important as climate change and social issues gain attention. Investors are seeking opportunities that reflect their values. Studies show sustainable investing often outperforms traditional investments, proving you can achieve strong returns while making a difference. Embracing environmental, social, and governance ESG principles is essential for long-term financial success. Main insights. 1. Understanding ESG criteria. Companies that prioritize ESG factors are generally more resilient. Investing in these businesses supports ethical practices and taps into a market likely to outperform in the long run. 2. Long-term growth potential. Sustainable companies adapt better to regulatory changes and shifting consumer preferences. Research indicates firms with strong sustainability practices enjoy higher profitability and reduced risks. 3. Diversifying your portfolio. Incorporating sustainable investments can enhance your portfolio's resilience. Explore sectors like green energy and sustainable agriculture to align with your values while spreading risk. Practical steps to get started. Research sustainable investments. Identify companies or funds that prioritize ESG principles, looking for certifications like B Corp or reputable ESG ratings. Create a sustainable investment plan. Outline your investment goals, risk tolerance, and ethical priorities to stay focused on what matters. Monitor and adjust. Regularly evaluate your investments and be prepared to adjust your portfolio based on performance and evolving ESG criteria. Common mistakes or cautions. Ignoring due diligence. Not all companies claiming to be green are genuine. Verify their claims through research. Overlooking financial metrics. Balance ethics with potential returns to avoid sacrificing financial growth. Neglecting diversification. Don't concentrate all funds in one sector, even if it aligns with your values. Diversification mitigates risk. Conclusion. Sustainable investing aligns your financial goals with your values and secures your financial future. Ready to embark on your journey toward financial freedom through sustainability? Start today by researching ESG investments and building a portfolio that reflects your commitment to a better world. Call to action: if you found this video helpful, subscribe for more insights on conscious investing and personal finance tips. Let's work together toward a sustainable future. Video script: from side hustles to ESG, creative ways to earn while making a difference. Introduction: want to increase your income while positively impacting the planet? You're not alone. With sustainable investing on the rise and a focus on environmental, social, and governance (ESG) factors, many are finding innovative ways to earn money that align with their values. Why it's important: as climate change and social responsibility concerns grow, investors are shifting towards sustainable practices. Studies show that companies prioritizing ESG factors often perform better financially. This trend reflects changing consumer behavior and underscores the responsibility of investors to foster a sustainable future. Aligning investments with ethical values can yield both financial gains and societal benefits. Main insights: 1. Understanding ESG investing. ESG investing evaluates companies based on their environmental impact, social responsibility, and governance practices, helping identify financially sound businesses that contribute positively to the world. 2. Leveraging side hustles for ESG. Numerous side hustle ideas align with ESG principles, from selling eco-friendly products to launching sustainable fashion brands, allowing you to earn while promoting responsible practices. 3. Passive income with purpose. Investing in ESG-focused funds or companies can create passive income streams, enabling you to earn dividends while supporting sustainability. It's a win-win for your wallet and the environment. Practical steps: 1. Research and educate yourself. Dive into ESG investing and sustainable practices through books or online courses. 2. Identify your interests. Reflect on what sustainability aspects resonate with you, whether renewable energy, ethical fashion, or social justice. 3. Get started on a side hustle. Choose a side hustle that aligns with your values, such as selling eco-friendly products or freelancing for ESG-focused companies. 4. Invest wisely. Seek investment funds or companies that prioritize ESG criteria, and use money management apps to track your investments and their impact. Common mistakes: rushing into investments. Avoid jumping into ESG investments without thorough research. Ensure the company's practices align with your values. Focusing solely on profit while making money is important. Remember that the primary goal of ESG investing is to promote sustainable practices. Don't compromise your values for short-term gains. Ignoring diversification. Diversify your ESG investments to balance risk, just like traditional investing. A well-rounded portfolio can help weather financial fluctuations. Conclusion: by merging your financial goals with ethical values, you can create a sustainable income stream that benefits both you and the planet. Explore ESG investing and side hustle opportunities today. If you found this video helpful, like, subscribe, and share your thoughts in the comments below. Source list: Source I, ESG Investing Basics. Source 2, Sustainable Investing Overview. Source 3, Side Hustle Ideas. This script aims to provide valuable insights while encouraging viewers to take actionable steps towards sustainable investing and earning. Video script: Green Stocks 101, Navigating the Stock Market with an ESG Focus. Introduction. Welcome. Today, we're exploring green stocks and how to invest ethically. With a growing desire to align financial goals with values, sustainable investing has never been more relevant. Ready to make a positive impact while building your wealth? Let's dive in why it's important as climate change remains a critical issue. The demand for ethical investments is surging. Studies show that sustainable companies have outperformed traditional ones in recent years. These firms prioritize environmental and social governance (ESG) and often demonstrate stronger long-term financial performance. Investing in green stocks is not just a trend, it's a step toward a sustainable economic future. Main insights: 1. Understanding ESG criteria. ESG investing focuses on environmental responsibility, social equity, and corporate governance. Companies excelling in these areas are not only better for the planet but also more resilient to market fluctuations. 2. The rise of sustainable funds. Sustainable investment funds are gaining immense popularity, attracting billions in investments. Choosing these funds allows you to diversify your portfolio while supporting companies committed to positive change. 3. Long-term gains over short-term trends. While traditional stocks may offer quick returns, sustainable companies often pursue long-term strategies that yield substantial returns over time. An ESG focus can foster sustainable wealth building. Practical steps: research ESG ratings. Investigate ESG ratings from various agencies to find companies that align with your values. Diversify with sustainable funds. Consider mutual funds or ETFs focused on ESG criteria to spread risk and support sustainable practices. Stay informed on trends. Keep an eye on economic trends related to sustainability and ESG to adapt your investment strategies. Common mistakes: overlooking research. Avoid jumping into green stocks without thorough research. Assess a company's genuine commitment to sustainability. Chasing trends. Don't get swept up in fleeting trends. Focus on companies with a long-term sustainability vision. Neglecting portfolio balance. Ensure your portfolio remains balanced. Overconcentration in one area can increase risk. Conclusion: investing in green stocks aligns your financial goals with your ethical values. If you're ready to embrace sustainable investing, start your research today. Don't forget to like, subscribe, and hit the notification bell for more tips on building wealth while making a positive impact. Together, let's create a better financial future for ourselves and the planet. How ESG metrics can boost your investment returns and impact. Introduction: have you considered how your investments can align with your values while growing your wealth? In this video, we'll explore how environmental, social, and governance ESG metrics can enhance your investment portfolio and contribute to a sustainable future. Why it's important with climate change and social responsibility gaining urgency. Investors are seeking ways to align their portfolios with ethical values. Recent reports show that sustainable investments often outperform traditional ones, demonstrating that doing good can also lead to financial success. This trend reflects global priorities and offers savvy investors a chance to capitalize on emerging market opportunities. Main insights: 1. Improved financial performance. Companies that prioritize ESG practices tend to outperform their peers. Research indicates that sustainable businesses often enjoy lower operating costs and higher profitability due to efficient resource management and increased brand loyalty. 2. Risk mitigation. ESG metrics can uncover potential risks that traditional financial analyses may overlook. Studies show that companies with strong ESG practices face fewer regulatory fines and reputational issues, making them safer long-term investments. 3. Attracting capital. Investors increasingly demand transparency regarding a company's social and environmental impact. Research highlights that companies with robust ESG metrics attract more capital. As investors become more selective, practical steps 1. Research ESG funds. Look for mutual funds or ETFs that incorporate ESG criteria. Websites like Morningstar or Sustainalytics provide ratings and insights on ESG-focused funds. Point 2. Evaluate company practices when considering individual stocks. Assess how companies rank on ESG metrics. Review sustainability reports and third-party ratings to gauge their commitment. Point 3. Engage with ESG advocacy. Join forums or social media groups focused on sustainable investing. Networking with like-minded investors can offer valuable insights and keep you updated on ESG trends. Common mistakes or cautions. Ignoring financial fundamentals. While ESG is important, don't neglect traditional financial metrics. A company with high ESG scores may still be a poor investment if its financial health is lacking. Overlooking established companies. While startups may showcase impressive ESG practices, established companies often have the resources to implement sustainable practices effectively. Falling for greenwashing. Be cautious of companies that claim to be green without substantial evidence. Always verify their claims through independent assessments. Conclusion: investing is not just about financial returns, it's also about making a positive impact. By integrating ESG metrics into your investment strategy, you can align your portfolio with your values while potentially boosting returns. Ready to elevate your investing game? Subscribe for more tips on achieving financial freedom while making a difference. Source list. Source 1. Insert URL for the source of data used in the script. Investing with Purpose. Build wealth while saving the planet. Introduction. Ready to make your money work for you and positively impact the planet? Welcome to Sustainable Investing. In this video, we'll explore how to align your financial goals with your ethical values, contributing to a brighter future while building your wealth. Why it matters. With climate change and social responsibility at the forefront, investors are increasingly seeking ways to reflect their values. Sustainable investing is not just about environmental benefits, it can also lead to strong financial performance. A 2020 report by the Global Sustainable Investment Alliance revealed that sustainable investment assets reached $30.7 trillion globally, a 34% increase in just 2 years. This trend underscores the potential for companies prioritizing environmental, social, and governance ESG factors to deliver superior long-term returns. Key insights. 1. The power of purpose. Investing in ESG-focused companies supports ethical practices and often results in better financial performance. Research shows that such companies tend to outperform their peers over time. Point 2. Conscious diversification. Sustainable investing enables diversification across profitable sectors that benefit society, such as renewable energy, sustainable agriculture, and green technology. Point 3. Consumer demand drives change. As consumers increasingly prefer sustainable products, companies prioritizing ethical practices are more likely to succeed, making them attractive investments. Practical steps. 1. Research sustainable funds. Explore mutual funds or ETFs focused on sustainability and ESG criteria, looking for those with strong performance records. Point 2. Evaluate ESG scores. Use platforms like MSCI or Sustainalytics to assess a company's ESG score, helping you gauge its sustainability and ethical governance. Point 3. Invest in green bonds. Allocate part of your portfolio to green bonds, which fund projects with positive environmental impacts. Common pitfalls: overlooking financial fundamentals. While ethical investing is crucial, ensure the companies you choose are financially sound. Beware of greenwashing. Be cautious of companies that exaggerate their sustainability efforts. Always verify claims through third-party assessments. Neglecting diversification. Avoid concentrating solely on sustainable sectors. Maintain a diversified portfolio to mitigate risks. Conclusion: sustainable investing not only helps you achieve financial freedom but also allows you to make a meaningful difference. Start your journey toward wealth while saving the planet today. If you found this video helpful, like, subscribe, and hit the notification bell for more investing tips. Sources: Global Sustainable Investment Alliance, MSCI ESG Ratings. Sustainalytics. Invest with purpose and watch your wealth grow while making the planet a better place. Video script: Passive income through purpose. Exploring sustainable investments. Introduction: Are traditional investment methods leaving you frustrated? Imagine earning passive income while contributing to a sustainable future. Today, we'll explore how you can achieve financial freedom through purpose-driven investments that align with your values, why it's important with climate change and social justice at the forefront. More investors seek ways to make their money work for the planet. A 2021 report shows sustainable investing has reached nearly $35 trillion globally, underscoring its importance. By aligning your financial goals with ethical values, you not only help the environment but also tap into emerging markets prioritizing sustainability. Main insights: 1. Diversification. A portfolio of sustainable assets enhances diversity and reduces risk. Companies focusing on environmental, social, and governance (ESG) principles often outperform traditional firms over time. 2. Financial returns. Sustainable investments can deliver competitive or superior returns compared to traditional options. Investing in green technology supports the transition to a sustainable economy. 3. Regulatory trends. Governments are implementing regulations favoring sustainable practices, making this investment space more attractive. Investing in compliant companies can mitigate future risks. Practical steps: 1. Research sustainable funds. Look into mutual funds or ETFs focused on sustainability with a solid track record in ESG criteria. 2. Consider individual stocks. Identify companies committed to sustainability and analyze their financial health in sectors like renewable energy and electric vehicles. 3. Monitor trends. Stay updated on sustainable investing trends through financial news, investment platforms, and ESG rating websites. Common mistakes: overlooking research. Avoid investing without thorough research into a company's genuine sustainability efforts. Ignoring financial metrics. Balance ethical considerations with financial viability. Sustainable doesn't always mean profitable. Falling for greenwashing. Be cautious of companies claiming sustainability without evidence.